on corn.
Spring 2025 is shaping up to be a season of uncertainty. Markets remain volatile and grain prices are trending higher due to tighter than expected supplies. With so many unknowns ahead, you need a reliable partner to navigate the challenges. At Advanced Trading, we specialize in creating customized marketing strategies that protect your operation and help you succeed. Stay ahead of the markets with the trusted experts at Advanced Trading. Advanced Trading, you never stop working, and neither do we.
Welcome. Thanks for joining us today as we recap the Feb WASDE. I'm joined by Jeremy Strubhar and Brian Basting. Kind of normal flow today. Got a hat on. I think the kind of theme is it probably plays into the report. It was a little bit of a sleeper. I'm a little groggy. We had some flu going through the house, so we'll jump right into it. Maybe not the expectations. Usually it's a pretty quiet report in general. We watch a little bit of the South America changes, and for the most part, we're kind of in limbo here as we start to shift into the U.S. what ifs, balance sheet, new crop acres, et cetera. Few changes today. We didn't see much on the corn demand from our domestic corn supply or demand, but we saw some interesting changes to the South American production. Kind of highlight what we saw today, Brian, on the corn balance sheet.
You hit the nail on the head, Nate. It was an unchanged corn balance sheet. However, one tidbit that was important today is they adjusted the milo balance sheet. They took 50 million bushels off the sorghum export total from January, and they added 25 million to their ethanol production or ethanol usage of milo and their feed usage of milo. So maybe that took a little bit of the edge off of the corn ethanol number, which was unchanged at 5.5. There are some estimates out there that maybe that 5.5 number eventually could creep higher, but maybe the USDA threw a monkey wrench into that today by confirming the milo. And I know that's something you guys have talked about, is that the milo ethanol production has jumped up here. So, but other than that, Nate, no, there were no changes domestically. I think we're waiting to see down the road what wheat feeding may be, but that's probably going to be at earliest a late spring, more so a summer question mark that we'll look at. But for the moment, I think we're looking at that 1.54 carry out on corn, unchanged from January, near 10% stocks to use ratio, still historically tight, but really no changes today domestically. Worldwide, we did see some changes though, Nate, that were worth noting. They took the Ukraine corn exports down by 1 million tons compared to last month. That was a combination of smaller beginning stocks and more domestic feeding in Ukraine. So that's a competitor, of course, key competitor. Some people still think that 22 million tons is too high, Nate.
Yep.
But we'll see down the road. We can watch that every week and see what our shipments and sales are. And South America, they did take 1 million tons off Argentina, down to 50 million tons now. That's unchanged from last year now, Nate. We've been working with a higher number compared to last year for Argentina corn. That number is now unchanged. Exports are still, though, unchanged from last year. Both those numbers are fluid because corn is pollinating as we speak here in Argentina. And finally, on Brazil, they took the Brazil crop down 1 million tons, but they didn't change the Brazil exports from last month. So Brazil crop is now getting more planted. The safrinha crop's getting planted as we speak. And of course, then March and April and May will be critical months. But I think it's still long-term supportive of exports at these levels. One fly in the ointment, Nate, was that they took Chinese import estimate down 3 million tons.
Yeah.
3 million tons from last month. So unless there's some bargaining in the future in terms of the tariff situation with China, it doesn't appear as China is going to be a big buyer of U.S. corn.
Feels that way today, and I think you hit it perfectly. Somewhat acknowledging the weather situation we've seen in Argentina with the reduction, Brazil, both maybe some of their first crop corn, southern Brazil issues, but I wouldn't necessarily say highlighting the risk of the safrinha planting. Like you said, yes, it's behind pace, but we can still make up that window. At the end of the day, though, our reoccurring theme this year has been competitor exports outside of the U.S. were historically tight. So if the world wants corn and needs corn, the window between now and that safrinha harvest, they could continue to come to the U.S. And one of the big unknowns in that picture was China, who has nothing on the books today. So kind of seeing the USDA acknowledge that, I'm probably going to be off, but I think they started the year around 17, and we've seen some cuts, and now they're down to 10. So the market had anticipated some of that lack of Chinese demand, and the USDA acknowledging that today is enough to offset some of those risks in South American production. But we still got to get that crop in the ground in Brazil, and we got to get it grown because that's a key factor in what our remaining of the marketing year exports could look like. The other thing I wanted to note was the milo and wheat. Like you said, I think last month's report, we kind of tossed that out there. This may be the tightest carryout we see on paper, just because the market had started to acknowledge the physical milo trading into that domestic use, and a lot of interest with the wheat corn relationship on what wheat feeding could be as we get into Q4. And maybe that changes. Corn's got to let that wheat feed. If we increase our exports, that's probably more of a reality that we do feed some more wheat, given the wheat balance sheet, which we'll get to here in a little bit. Jeremy, for you, kind of highlighting what do we see on the bean picture? Similar to corn, not a lot of changes in the U.S. balance sheet, kind of a sleeper, but we did see some South American changes, maybe some acknowledgement of what we're seeing for Brazil and for Argentina even more.
Yeah, as you said, the domestic balance sheet did not change a single bushel, but the Brazilian number did drop from the estimate average of 169.9 down to 169, which is in line with the January number. The Argentina number was 52 in January, and they dropped it down to 49 million metric tons. The private sector was guessing 50.6, so that is below even what the private sector was estimating. So it will be interesting to see how that plays out as we continue to get deeper into harvest. As of right now in Brazil, the harvest pace is about 14.8% as of Sunday, roughly 15% compared to an average closer to 20. So we are definitely behind.
A little slower to start.
And I've heard from the ground, a lot of those beans are wetter than the farmers necessarily want to take them. They just feel they have to get after them. So I'm not sure how the quality is, but they are out and they're trying to get them.
And I think the takeaway I've got from the beans is probably acknowledging that Argentine dryness that we saw on some of the heat. So realizing some of that production, which there's still some in the private that are, or some estimates that are still below the current 49. But at the end of the day, it feels like that Brazil crop, while it's slow, maybe a little slower start than average, is a good crop. And when you're facing 169 million metric ton or 172 or 167, whatever direction that goes, year over year growth in South America still seems to be, at the low end, 10, 12 million metric ton, and the high end somewhere in that 15, if there is some upside in Brazil. So we still have headwinds of that competitiveness out of Brazil. And while their lineup's growing, their pace of exports is slow, but you got to think that at some point when that harvest picks up, those bushels are looking for a home.
Yeah, exactly. And the world soybean stocks are actually at 124 0.3 million metric tons, which is almost 10% higher than last year, and this time at 112.
So we've got
So
plenty.
we got beans.
We've got plenty out there. Shifting away from maybe the balance sheets a little bit and talking about, all right, we're in the month of February. We're in the crop insurance pricing period. Do we feel like we're starting to shift some of this corn tightness? We've seen the corn board rally, some of the unknowns in South America, and the bean picture feels comfortable today. What do you think we have to see for an acreage battle here? Do we have to buy some U.S. bean acres here, or can we still feel pretty comfortable and grow our way out of this if we don't see any further changes in South America?
At this point, I'm not thinking we need to buy a lot of acres because our stocks are so high
World stocks.
internationally.
Yep.
And that could change if South America's crop is delayed and quality is
Right.
poor and they can't export it. But for now, it feels like we don't need to. And the price domestically, we're about $1 below last year's crop insurance price currently,
Okay.
whereas, or maybe 80 cents today. Where corn is almost exactly where last year's crop insurance price is.
Economics are favoring corn, and which could be a surprise in the acres. I mean, that's something for a producer to be aware of here as we get into the end of the month and then shift into March, what that new crop acre intentions looks like.
Exactly.
We could see a swing, the high side on corn, potentially muting this corn rally to an extent, especially if Brazil's getting planted and we're not emphasizing that risk as much in their safrinha production. On that note, you said when we're looking at the pricing and the economics, is there much producers? Is February kind of an I don't need to do anything type month and I'll wait on my new crop insurance prices and then decide what to do? Or what are some tools that they could look at to kind of help manage through this volatility and maybe even going into the March intentions?
Oh, if you still have old crop, a producer really needs to be looking at the cost of ownership. If he owns it commercially, the cost of storage plus interest probably outweighs the return from the carry. So it would make a lot of sense to go ahead and sell it. And at the money may call it for corn costs around 19-20 cents.
Still pretty cheap.
For soybeans, around 30. Still, again, as a percent of the underlying, only about 3% relative to the cost of beans or the value of beans. They are very cheap. So it makes a lot of sense. Let's get rid of it, sell it, buy it in the form of a call, which also sets a floor and keeps us in it if the market goes higher. We may touch on it later, but there's always the risk of tariffs or something else. The black swan that really drops in this market. So let's make sure we have something underneath us in case the market does fall out of bed.
Great point. Shifting away a little bit from the farmer marketing and Brian, just a quick highlight, kind of what we saw on the wheat balance sheet. Didn't seem like a ton of changes. We're seeing a little bit of weather volatility with another snap of some cold temps and some snow. What do we see, if anything, that kind of highlights on the wheat side?
Really, almost no change on the domestic wheat balance sheet here in the U.S., Nate. The only change USDA made was a slight increase in the food use of wheat because of the recent flour milling products report showed we had decent O&D grind for wheat. But other than that, no change in exports, no change in feed. So we're right around just a shade under 800 million bushel carry out of all wheat compared to a year ago. Some variations by class, but I think on the world numbers, there were some interesting changes, Nate. They did take 500,000 tons of exports, a reduction in exports for both Russia and Ukraine this month. And of course, we're watching very closely, particularly Russia, as it is getting into this last 3, 4, 5 months of the crop year. Will they constrict their exports if they start to see those domestic prices in Russia really take off, and or their new crop starts to look a little rough? So that'd be something to keep in mind. The offsetting factor there, Nate, is we look at combined exports from Argentina and Australia are up 8.5 million tons from a year ago. So as those supplies enter the world pipeline here, probably starting about the 1st of March in earnest, we're going to become the residual supplier.
Still the residual supplier.
The last quarter of the crop year. So I think looking at new crop briefly, Nate, you mentioned a very important point. It's going to get really cold here.
Right.
We've had a mild winter for the most part so far, but they're saying some sub-zero temperatures. That makes this week's snowfall event pretty darn important, because if there's some exposed wheat out there and it gets really cold, the further we go along here, the more vulnerable, if you will. Now, we're not going to kill the wheat, necessarily. It could burn it back pretty good.
Sure.
And so I think this snowfall event will be important to give that wheat a blanket,
little coverage.
protection.
Yeah.
as you get into the second half of February here. So we'll see how that shakes out the next week or so. But for the most part, around the world, there's a little bit of rough spots in Russia in terms of the new crop here and there. But at the moment, Nate, not anything devastating around the world, Northern Hemisphere wise. But that's something we can watch going forward too. But other than that, I think wheat is showing some life here recently. But all classes, I'd say, are going to be pretty choppy here in the absence of a Northern Hemisphere problem.
Well said, well said. And kind of summary then, as expected in the February report, it's not usually a crazy outlier volatility, usually kind of in check, still carrying that momentum that we saw in surprise in the January final crop. And so we roll into the insurance pricing period, and the volatility today, the unknowns. We've got a fund long in corn, some of the policy left hook that we can't account for. Trump's making a lot of changes in the first couple weeks of his new presidency here. That probably continues. So I don't think the producer should get complacent on where they're managing. We've bought a lot. Producers have sold a lot of this old crop. Don't lose sight of the remainder of that unsold old crop.
Exactly.
And look at tools to help manage that risk in that new crop, because a lot of changes can still happen. We can grow our way out of this. We could see issues in South America. We could see unforeseen demand. We could see a Trump 2.0 trade agreement and China start to buy something that's not in the balance sheet today. So don't forget tools to help manage that. Jeremy, I think you hit those well.
Well, thank you.
So
one final note on that, Nate, in a nutshell, both of you did a terrific job. Get control of this old crop is the biggest thing I think I'd share today. So you can turn your attention then to new crop 100%, while still maintaining that ability, as Jeremy said, to be in the market on old crop in case something does happen,
right?
Whether it be a South America or, as you said, a trade agreement 2.0. But Jeremy did a terrific job of saying, let's take a look at some of those options, call options out there, but let's take advantage and get a flow underneath these old crop bushels. So I don't want to put words in your mouth, Jeremy, but I thought you did a terrific job on that.
No, that's exactly right. And new crop as well. When I talk more on old crop, we have 470. We had before in the close 470 December 25 futures. I think we fell just below it. The last time we hit 470 was June 18th of 24. So it's been a while, and we don't know where we're going from here.
Inputs are not coming down.
No, it's not a attractive number, but it looks better than where we were on the low of 430 December corn.
Well said.
Let's get some puts on, protect ourselves, and make sure we make some money.
Yeah. Well, thanks for joining us. Don't forget, next time, March 11th, I think, is the next USDA report. ATI Pro Media every morning, 9 a.m. Stay warm, get ready for the snow, and tune in next time. Thanks.